Good morning, I'm Maiki Oreta. You're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin with a legal victory for Alphaland Southgate Tower as the Court of Appeals voids the Bureau of Internal Revenue's 3.76 billion peso tax claim against the company. The ruling found that the tax demand was invalid due to the lack of authority over the revenue officer who signed the assessment. The CTA also rejected the BIR's argument that Alphaland Southgate's petition was late and prohibited the BIR from collecting any amount related to the disputed assessment. The BIR started its investigation into Alphaland Southgate back in March of 2016 with the issuance of a letter of authority to examine the company's financial records. The case was challenged in 2021 by the company, owned by the late businessman and former Trade Secretary Roberto or Bobby Ongpin. President Bongbong Marcos touts the country's recent A- credit rating, which was given by a debt watcher based in Japan. Marcos says that the latest assessment from Rating and Investment Information, or R&I, reflects investor confidence in the strength of the Philippines. The president is confident that this will help the nation attract more foreign investments, reduce borrowing costs, and enable more affordable financing for all, the government, for businesses, and consumers alike. Marcos vows that all Filipinos will benefit from the economic growth. The Japan-based debt watcher R&I says that the upgrade in the Philippines' credit rating from BBB+ last year comes on the back of the country's strong macroeconomic stability, high economic growth path, and favorable fiscal outlook. This is only the second A-level investment grade rating of the Philippines. The first was back in 2020 from Japan's credit rating agency, or JCR. On to the financial markets in the United States. Stock futures are seeing modest gains as investors there look to Federal Reserve Chairman Jerome Powell to gauge America's economic prospects. This, as Powell is due to deliver the keynote address at the central bank's annual economic symposium in Jackson Hole, Wyoming this Friday. The minutes from the Fed's July meeting will also be released this week, and investors will likely look out for hints on the timing of the first rate cut there in years. U.S. stocks are coming off their best week of the year following a slew of economic data that ease worries over a recession in the world's largest economy. Meanwhile, the U.S. presidential race is about to heat up as Democrats hold their party convention in Chicago this week. Now, over the four-day event, prominent Democratic figures are expected to deliver speeches aimed at consolidating support for their candidate, Vice President Kamala Harris. Aside from the convention, the Harris campaign also says they plan to spend at least $370 million on digital and television ads nationwide until Election Day on November 5th. The VP has surpassed Republican bet former President Donald Trump in several betting markets. But at a rally in Pennsylvania on Saturday, Trump claimed Harris will be easier to beat than President Joe Biden. Trump again took a jab at Harris on inflation, saying she should have done more to tackle this issue. The Harris campaign says Trump's latest speech is filled with lies and confused rants. Elsewhere in the world, social media platform X ceases operations in Brazil due to what they claim are censorship orders from a judge. The judge allegedly threatened to arrest and impose a fine on one of the company's legal representatives if they did not comply with legal orders to take down some content from the platform, particularly those of supposed digital militias being accused of spreading fake news and hate messages. Brazil's Supreme Court has neither confirmed nor denied the alleged threat against X. Billionaire Elon Musk, who owns the platform, says that their decision to shut down operations in Brazil was difficult. Musk adds that he would rather close their operations there than comply with the Brazilian Supreme Court judge's orders to suspend accounts. X says, however, that its social media service will still be available to users in Brazil despite the closure of their office there. Now over to Israel, where the economy grows less than expected due to the impacts of the country's continuing war against Palestinian militants. Israel's Statistics Bureau says that their GDP, or gross domestic product, grew by an annualized 1.2% in the second quarter of the year. That's much slower than analysts' estimates of 4.4% growth. Meanwhile, over the first half of 2024, their economy expanded 2.5% at an annual rate against 4.5% in the same period in 2023. The slower growth rates demonstrate a period of volatility amid Israel's war with the Hamas group, which began last October. But the weak GDP figures are not expected to prompt the central bank to issue a rate cut at their next policy meeting next week as the country deals with rising inflation. We're taking a quick break. Basis Points will be right back. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Let's take a look at the opening figures at the Philippine Stock Exchange. Right now, as of 9:37, the PSE index is up by 0.5% to 6879, still well entrenched in that 6800 territory. All shares index up by 0.3% to 3701. Financial sector up marginally, up by 0.1%. Industrial sector, that's the only one in the red, down by 0.3%. Meanwhile, the holding firms, services, mining and oil and property counters are in the green. Services, mining and oil and property counters in particular are up by 1%, over 1% each. Now, to help us make sense of these numbers, we're joined by Japhet Tantiangco, the research manager of Philstocks Financial. He joins us via Zoom. Good morning, Japhet.
Good morning, Ms. Maiki. Thank you very much for inviting me.
Okay, so Japhet, last Friday, the PSE index rallied to the 6,800 level. This was on the back of optimism over our economic prospects following the BSP's rate cut, and also coupled with easing worries of a recession over in the United States. Now, at these levels, fundamentally and technically speaking, can you describe where we stand right now?
Well, with respect to the local market, so far, as you've mentioned, things are going good. We're seeing positive developments. You have the recent rate cut by the Bangko Sentral ng Pilipinas, which of course boosts prospects for the local market and the local economy in general. We're also seeing recession fears easing in the US. So these are positive developments for the local market, which in turn is, it's helping it in, staging a rally as we're currently seeing. However, if you're going to look at the market, it's still at undervalued level. If you're going to look at PE ratio, I mean, currently the local market is trading at around 12 to 13 times, and this is below its historical average. It's at least its last 5-year average of about 18 times. It's also below the regional average of about 16 times. Now, if you're going to look at technicals, if you're going to look at technicals, the market has just gotten past the 6768 resistance range. And if the market is able to sustain its position above the said range, then this will be its new support, whereas the next resistance that we are seeing is at 7,000.
Okay, and we are pretty close to that. Right now we are at 6879. Just 2 weeks ago, people were saying that 6,800 was their year-end target. Given that we're at 6879 now, and it really looks like the U.S. Federal Reserve is going to be decreasing interest rates. How much upside potential do we have, and how have you revised your year-end targets on account of the rate cut by the BSP and the looming rate cut from the Fed, which will in turn support the BSP's stance on a looser monetary policy?
Well, with respect to the local market, if you're going to look at it from a fundamental standpoint, if you're going to, at least based on our computed intrinsic values of the index members, the local market should be at around 8,200 right now. I mean, for us, that's the fundamental value of the local market. However, we all know that that's from a purely fundamental standpoint. We all know that the local market here in the Philippines is somewhat more of sentiment driven. So we really need we need not just the right we need not just robust fundamentals, but we also need the right narratives in order to push the market there. So that's for the fundamentals. How about the technicals? With respect to the technicals, as mentioned, the market has just gotten past 6768. So right now, since the market is able to hold its ground above the said range, we're now considering this as the support. The next resistance is a 7,000. Now, if the market is able to get above 7,000, we do see a minor resistance at 7,100. And if the market is able to get past that, if it is able to get past 7,100, the next resistance that we are already seeing is 7,400. Now, will the market be able to reach 7,400 by year end? We do think it's possible. Given the narratives that we are seeing right now, I mean, we already had a rate cut from the BSP, and take note that this is just this as far as we can see. This is just the start of the BSP's monetary policy easing. We may see more rate cuts down the road. In fact, BSP Governor Eli Remolona himself mentioned that there's still the possibility of one more rate cut before the year ends. And as you've mentioned, the Federal Reserve is also about to. There's also the possibility that the Federal Reserve will cut rates in their September meeting. So if we see these factors in play, along with continuous improvement in the overall macroeconomic fundamentals of the country and appreciation of corporate fundamentals, then yes, we do see the possibility of the market reaching, perhaps 7.4 by year's end.
How much more of a rate cut are you projecting, Japhet, till the end of the year?
Well, we are still looking into how much rate cut the BSP will do in total. But at least for 2024, we are expecting one more 25 basis point rate cut from the BSP, which will bring its policy rate to 6%.
Okay, all right. That's all going to be very bullish for the market, benefiting everybody. Now, onto a specific sector. Last week, something really stood out. The services sector posted the highest gain among the indices, up 3% on the back of index heavyweight ICTSI. That was a darling of the market. I guess it's the global economic prospects, the fears of the recession not happening in the United States is really boosting sentiment. And this is a global port operator. ICTSI jumped 5.61% to 395 pesos per share last Friday. Can you talk to us about this specific stock? And at this level, at 395 per share, what are your recommendations on it?
Well, for ICTSI, it really did have a good run, and yes, as you've mentioned, this is due to improving global economic prospects. I mean, you have advanced economies implementing monetary policy easing. I mean, you have the European Central Bank, and then likely to follow would be the Federal Reserve. And then, of course, you have these monetary policy easings are expected to, boost global demand. And then you have, easing recession fears in the U.S. And then you have, some good economic performances, like, for example, Japan's economy beating expectations. So we're seeing these positive signs, which in turn are pointing to the possibility of a stronger global trade moving forward, which will benefit ICTSI. And of course, this is the reason that we're seeing as to why ICTSI had a good run. However, at current levels, we do see ICT at overvalued already. The target price that we have for ICT is at 380, around 385. So with being above 390, so we really see ICT as overvalued already. So for those who hold positions with ICTSI, we recommend selling for now and booking gains.
Yeah, and then wait for a pullback to get back in, and it's in the offing. All right. Right now, in this market at 68.79, what's undervalued and what's overvalued?
I'm sorry, ma'am.
Right now, we're at 68.79. What would you say are the sectors that are undervalued, or specific stocks, if you want to even go that far? What's overvalued and what's undervalued?
Oh, I see. As mentioned, the market, the fundamental value that we see for the market, for the general market right now is around 8,200. So, if you're going to look at the index members, a lot are still at undervalued levels. In fact, it's easier to point out which are those which are currently overvalued. The ones that we see as overvalued, first will be those under the telecommunication sector. So of course you have Globe, PLDT, you have Converge, and then you also have ASEN, you have ICTSI as mentioned, and then finally Meralco. For now, those are the stocks that we see as overvalued, at least in the index members. But for the rest, we see them as undervalued.
Okay, now before I let you go, Japhet, let's talk about the foreign exchange, the peso for a little bit. The peso depreciated back to the 57 level to the dollar after the Banco Central opted to take a looser stance on monetary policy. We all know that the Banco Central slashing interest rates is negative for the peso. We saw that on Friday. Today we opened at 57 pesos and 5 centavos against strengthening slightly from our previous close of 57 pesos and 12 centavos. Right now, we're trading at a range of between 56 pesos and 96 centavos and 57 pesos and 5 centavos, same as our open. Given the potential for rate cuts by the Fed in the United States, now this will be positive for the peso. Where do you see us finishing the year?
Well, for the peso, it would depend. Of course, as you've mentioned, one of the main factors that investors are looking at when trading currencies would be the policy moves of the central banks. And as we've seen, because of the BSP's rate cut, the peso did decline. However, the local currency might be able to regain territory moving forward if the Federal Reserve also starts its monetary policy easing. But of course, there are other factors that we have to consider aside from the policy moves of the central banks. We also have to consider, of course, of primary importance, the foreign fund flows in and out of the Philippines. Moving forward, if we see a balance of trade, if we see a sustained balance of trade if we see a sustained balance of payment surplus for the local economy, then there's still the possibility of the currency moving upwards. It might end, it might end the year within at least for now we're seeing between 57.50 to 56.50.
Okay. All right. Thank you for your thoughts on the financial markets, Japhet.
You're very much welcome.
All right. Now we're taking a quick breather. Basis points will be right back. Welcome back to Basis Points. Let's check on the business headlines in the major news websites. On Inquirer, cash remittances from overseas Filipino workers reached their highest level so far for the year. Remittances coursed through banks rose 2.5% year-on-year in June to $2.88 billion. An analyst, however, raises concerns over the possibility of a recession in the United States, a major host of Filipino expats, which would in turn pose a serious risk to remittances in the coming months. On Business World, the Bureau of Internal Revenue falls short of its July collection target by 8.2%. Preliminary data from the Department of Finance shows that the BIR collections reached 1.68 trillion pesos, below its 1.83 trillion peso goal for the period. The tally represents more than 55% of the BIR's 3.05 trillion collection target for 2024. And on CNBC, more health-conscious younger consumers and an aging older demographic are contributing to a growing interest in non-alcoholic beverages. This is helping fuel the rise of so-called functional beverages, or drinks that aim to go beyond hydration. These drinks, which surged in popularity, especially after the pandemic, are now crowding grocery stores and making their way into restaurants and bar menus. And before we go, here's a look at what's happening in the financial markets this week. First up, central bank chiefs from around the globe will gather in Jackson Hole, Wyoming, beginning Thursday for their annual symposium. As we mentioned earlier, U.S. Fed Chair Jerome Powell will deliver the keynote address this Friday, and with it, he'll get the chance to fine-tune his message before the Fed's monetary policy meeting this September. Most market participants believe that the Fed will finally begin cutting rates after a period of keeping them elevated to tame inflation. Still in the U.S., the weekly report on initial jobless claims will be released this Thursday. Last week, the number of Americans filing for unemployment benefits unexpectedly fell to a one-month low. Also due out this week, global purchasing managers' indices. Last month, PMIs suggested an economic slowdown combined with persistent inflation. Elsewhere in the world, over in Japan, Central Bank Governor Kazuo Ueda will face lawmakers on August 23rd to answer questions on monetary policy. The Bank of Japan surprised markets by raising interest rates to a 15-year high last month. That decision, coupled with fears over a recession in the United States, worried investors, triggering the Nikkei benchmark's biggest sell-off since the 1987 Black Monday crash. We'll also be keeping an eye out on energy markets, which have been experiencing volatility amid the global tensions. Last week, concerns over escalating conflicts in the Middle East drove international crude oil prices above the $80 a barrel mark. And that's it for Basis Points. I'm Maiki Oreta. Please stay tuned for more news on the financial markets and more tomorrow. Keep it here on BNC, the Bilyonaryo news channel, always on top.